Okay, so if you've even glanced at the housing market lately, you know it's been, well, a pretty wild ride. But what if I told you the tide might finally be turning? Let's dive into this new forecast that's hinting at a pretty major shift right on the horizon. For what feels like an eternity, this has been the story for anyone trying to buy a home, right? You've got these sky high home values, and then you've got mortgage rates just stubbornly sitting above 6%. It's a tough combo that's kept a lot of people just watching from the sidelines.
So, if you're one of those people, maybe you've been dreaming of buying a home, you're definitely going to want to pay attention. A new analysis is painting a picture of a really different landscape just around the corner.
And that brings us to the big news. We've got a brand new forecast from Realtor.com, and it's pointing to a major shift happening in 2026, one that is looking a whole lot more, shall we say, buyer-friendly. Yeah, here's the key takeaway from Jake Krimmel. He's a senior economist over at Realtor.com. He's saying that this intense seller's market that we've been stuck in, ever since the pandemic, well, it might finally be loosening its grip. So, what does that actually mean for you? Well, it means we could be heading for what they're calling the most balanced housing market we've seen in years. The key word there is balanced. Neither side holds all the cards, and that means there's more room for negotiation and, hopefully, less of that bidding war craziness we've all heard about. All right, so where exactly are we going to feel this shift the most? Let's take a look at the specific cities that might be in for a much-needed cooldown. Okay, I want you to just keep this number in your head for a second. 22. It might not sound like a huge number, but trust me, it's at the heart of a really big change that could be coming. That's right. 22 of the 100 biggest metro areas in the US are projected to see home prices actually fall in 2026. And we're not just talking about slower growth here. We are talking about real, honest-to-goodness price drops. And what's super interesting is where these price drops are all clustered together. We're seeing it mainly in the Southeast and out West. And get this, in Florida, 7 of its 8 largest cities are on that list. That's a huge regional trend right there. And just look at how significant some of these drops could be. I mean, we're talking a potential 10.2% decline in the Cape Coral-Fort Lauderdale area and almost 9% in the Northport Sarasota region. These are not small changes, folks. So the big question is, why? Why is this happening? What's going on behind the scenes that could cause such a targeted cooldown in these specific spots? Let's get into the forces behind this whole forecast. So what's the deal? Well, according to the analysis from Realtor.com, it's basically a correction. Like Jake Kreml explains, these cities were major pandemic hotspots. They saw this huge surge in demand, and now that frenzy is just kind of cooling off. It really boils down to two simple things. First, you've got more houses for sale in these areas, so more inventory, more choices for buyers. And second, that red-hot demand from the pandemic is finally coming back down to earth. You put those two together, more supply plus calmer demand, and you get a much more balanced market. Simple as that. Okay, so we've talked a lot about those 22 cities where prices might actually drop. But what about the rest of the country? What if you don't live there? Let's zoom out and look at the bigger picture for everyone else. So here's the perspective you need. While those 22 cities might see prices fall, the other 78 largest cities, they're actually still expected to see prices go up. This is a really targeted correction, not some nationwide crash. That's a super important distinction. And for those other 78 cities, we're looking at much more modest growth, around a 4% median price gain. Now, that's a whole lot different from the huge double-digit jumps we've gotten used to lately, and it's another sign that the market is just stabilizing. Another really key piece of this whole puzzle is mortgage rates. The forecast is calling for a small dip from an average of about 6.6% down to 6.3%. Now, look, it's not a massive drop, but hey, when it comes to your monthly payment, every little bit helps, right? And all of this together should lead to a small, but I think really important increase in home sales. After being pretty flat, sales are projected to climb just a little bit, which is another great sign that the market is finally getting back on track. And that's really the main story here. Like Jake Krimmel puts it, 2026 is shaping up to be the year the market finally finds its footing. The year it gets back to what we can all finally, hopefully, call normal. So what do you think? After all these years of just absolute chaos, could 2026 really be the year the housing market finds its balance again? It's a huge question, but you know what? According to this forecast, the answer might just be yes.